Welcome to the Big Mike Fun Podcast, where you learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in. Because Big Mike has got the mic, starting now.
Welcome to the Big Mike Fun Podcast. I'm the Big Mike
Zlotnick, and today it is my pleasure and a privilege to welcome Brad Sumrok. Hey, Brad.
Hey, I'm happy to be here.
So awesome to have you here. We're recording this from Cancun, from the Bigger Pockets annual conference. So we're about to be hit by the hurricane. Milton is here, and we're recording this despite the uncertainty and the concern of the hurricane. So once again, welcome. Would you be so kind to tell folks a little bit about you? You are a super guru in multifamily. You've had a great success. You have a community of students, you have a mastermind. Let me not speak for you. Would you be so kind as to tell folks a little bit about you, your history, kind of where you come from?
Yeah, thanks, Mike. And it's a pleasure to be here in Cancun at the Bigger Pockets conference with a pending hurricane. So I never thought I would be doing what I'm doing with my life. I started off with parents that never owned a business. They never even finished college. And so they taught me the importance of studying hard, getting good grades, going to college, getting a degree, getting a job, staying out of debt, and staying out of jail. And I did all that.
That's a good start, staying out of jail.
And I did all that, so I did everything right, or so I thought. And I was in corporate America for 14 years and found myself losing my job not just one time, but 2 times. And I actually thought about going for a 3rd degree, and I remember studying for the LSAT. And then I picked up the book that changed the trajectory of my life, and it was Robert Kiyosaki's Rich Dad, Poor Dad. And then the second book, The Cash Flow Quadrant, and I realized I'm on the left side of the cash flow quadrant as an employee, and I need to get on the right side. And I want to be a business owner and investor, but I didn't know where to start. But Kiyosaki talked about real estate network marketing, and network marketing didn't resonate with me. And I heard about people making money in real estate. And so where did I start? I went to a real estate investing seminar, and I was very skeptical. I was like, okay, what am I going to learn? I have 2 degrees here, but something just resonated with me. Everything the guy was saying made sense to me. And so I went to that seminar, and 8 months later, I bought my first rental property. It wasn't a single family rental. It wasn't a duplex. It wasn't a 4-plex. It was a 32-unit building.
Very few people jump from 0 to a small multifamily asset. So you must have gone to the right seminar that gave you a start in the multifamily very, very quickly.
Yeah, and one of the reasons, and I know you mentioned I have a mastermind in a mentoring community, but they had a mentoring program, and I enrolled in it. And I still have mentors today. I go to a Tony Robbins mastermind. So one of the keys to my success has been making sure I'm surrounded by people and learning from people that are ahead of me in the game.
That makes a lot of sense.
And if you want to get better in tennis, do you play with somebody worse than you, or do you play with somebody better than you if you want to get better?
You know what they say? You need a coach at every stage of life, no matter how good you get.
Yeah.
Even the best in the world give coaches. So as you keep progressing and you're getting better, you need to have a community and the right type of coaches in your top 5.
Yeah.
The relationships to keep moving you forward, right?
Yeah, and so that's how I got started. But then just going down the journey, I bought 32 and then 30. So I had 62 units, and my goal was to get 100 units and retire. So I have 62 units, and I'm still back in corporate America. I'm burning both ends of the candle, right? So I have a job, and I'm doing real estate and looking at deals and weekends and lunches, and I'm driving properties and buying my deals, managing the deals. And a broker brings me 250 units. I was all out of money because those 62 units, I used my own money that I saved from 14 years in corporate America. But I was able to figure out how to raise $2 million from people that I met going to, investor clubs, investor communities, the mentoring program. They had their own investor community. So I would show up to these meetups over 2 years when I went from 0 to 62 units, and people got to know me. They got to like me. They got to trust me. So when I found this 250 unit deal, I was able to put together an investor group, and that was my first syndication. And I'll tell you, 250 units was easier to buy. It was easier to finance. It was the lenders like it better. I got non-recourse debt. The 62 units, I had personal liability, personal recourse. The 250, I had no personal recourse on that loan. And the management company that I could hire with those 250 doors, I had professional property manager, professional leasing agent, professional maintenance people, and then the whole back office that does my financials, the balance sheet, the P&L, the rent rolls, everything. Where on 62 units, I'm trying to do that myself.
Let me capture for the audience two great wisdoms here. Know, like, and trust, right? To raise capital, you have to establish that. And most folks know that, but that's the required step. And then the next one is sometimes 10x is easier than 2x. Bigger assets with economy of scale work often quite better than smaller assets. And it's not easy to make that leap of size. Right?
Yeah.
But you did it, and it's an easier place to be. Plus, you have a better return on your time, right?
Yeah, and it's counterintuitive. So many people think that you need to start small and graduate, up gradually. But I would say the opposite. Like, you could start, and now, and like in my programs where I mentor other people, I even advise them, like, you don't even have to do the 32 unit. Like, you could go right in, whether you're new or whether you're doing like single family, or you got a couple doors here and there, short-term rentals, and you want to move into multifamily, you could go right into 60 to 100 unit syndication if you have the right system and you have the right belief. And I always tell people the best investment you can make, second best investment I tell people is an apartment building. The first is the real estate between your ears. When you invest in yourself, when you invest in your mindset, your skills, your network, and being in the right rooms around people better than you, playing a game at a higher level than you are, you're going to go bigger and faster and make less mistakes.
I couldn't agree more. The idea of mastermind and communities, what do they say? One brain is good, two brains are better when you have a whole community. You have resources, you have networking, you have strength in numbers, you have ability to get feedback. So it makes a lot of sense. So how do you get folks to go from sort of first, second deal to that 10th? I'm just curious if folks get together, their partner, how do you work with your students? Just again, from your expertise in the mastermind community and coaching, what's the best path for folks to be successful? Is it continue to do things yourself, or partner with some folks who are, somebody's really good at execution of construction, somebody's really good at finding deals, somebody's really good at raising capital? Just curious your thoughts.
Yeah, well, the first thing is everything that I help other people do is what I do myself. So, like, I'll answer that. My first 1,000 doors, I try to do it all myself. Meaning, like, I was the only GP, sourcing deals, going to broker networking events, going to, everywhere I could go to get access to deal flow. And then I'm underwriting the deals. I'm touring the properties, raising the capital, doing the due diligence, closing the deal, and then having to do all the asset management and CapEx management. So what I'm finding is I'm doing like one deal a year because I couldn't do anymore. Plus I was launching my mentoring program and my mastermind at that time. So it literally took me 10 years to go from 0 doors to 1,000 doors. And then when I realized how, when you collaborate with other people, not just in a syndication with one general partner and everybody else being passive, but I would start finding what I call co-general partners, like a team of, 3 to 4 people, where I would be one of those 3 to 4 people, and we divvy up the workload. So now we have some people that are just sourcing deals and underwriting deals and making the offers. And then other people are like helping secure the debt and raise the money and manage the asset. So when you look at all the things that need to be done to say, go out and buy a 200 unit deal, and you could collaborate with people that have like synergistic skill sets, not just people you meet in the bar and be like, hey man, let's go do a deal together because you like somebody. That's not the best formula, right? To have like this collaborative co-GP partnership. So I love to partner up with people that have complementary skills, and that's what I've done. So the first 10 years I went from 0 to 1,000 doing all of it myself. And then the next 10 years I went from 1,000 to 11,000 doors as a syndicator by collaborating with others in a co-GP model.
It's a lot of great nuggets here. I'll say this, my observation is, be careful who you partner with. So you got to get really good partners. Exactly.
Yeah.
This is not your, the person you meet at the bar, of course. You
Yeah.
have to find the right people who you want to partner with the right complementary skills. Ultimately, you're building an organization that does that strategy multifamily. And then another really wonderful nugget that I just kind of wanted to cover is quantitative versus qualitative. Sometimes you build, and then you break through. You build a critical mass and you discover how to do it. And you can 10x from there way faster than your first 1,000 doors.
Yeah.
So the next 10,000 doors you do just as fast.
Yeah, and that's one of the things. So, one of the things you asked was like, how do I work with my students? It's the same way. It's like you get them into a deal, you get them some experience, but like in my community, we'll have people with different experience levels. Like let's say you're new and you find a 100-unit deal and you find it and you underwrite it, but now you don't have the experience to close it, to get the debt, to raise the money, and you can bring that to someone with more experience and partner with them. And yeah, they're going to take a piece of the deal, but without them, you can't do it. And so we got a community of investors that oftentimes co-invest with each other, not just active and passive, but sometimes they'll form like GP teams and they'll co-invest, and then they'll split up all the workload. And this is how people scale. This is how people are scaling their business, whether it's their first 80-unit syndication or whether they're on 3,000 doors. This is how they're scaling.
That's wonderful. Let's move forward.
Yeah.
So you have a great community, you continue to grow and evolve, and now we are doing this in middle of October 24. So the market, things change. And what do you see ahead? I kind of want us to move us into the future.
Yeah.
Where are we today? Are you seeing great opportunities in multifamily? Do you think it's the best time to buy? A lot of folks did a lot of deals in the last few years. And when the rates were low until the rates spiked. And some of those deals are struggling today. The reverse is true now. It feels like a lot of deals are available for sale, and its transaction volume is very, very low. It's almost like everybody's scared to buy.
Yeah.
So what are your thoughts? I personally like what Warren Buffett said. Be greedy when I was fearful, be fearful when I was greedy. Now it's time to be greedy when everyone is fearful.
Yep.
So what do you think about opportunities now? And it's hard to raise capital. It's counterintuitive.
Well,
but it's the best time now. What do you think?
I couldn't agree more. I mean, I just used that slide in a event that I did last weekend. And here's the thing, like people have short-term memory. So I've been doing this 22 years and it's been a very lucrative business. But people that, they tend to remember the most, like the most recent things that happen.
That's right.
And so, the last 18 months, there were challenges with rising interest rates, inflation, rising costs, supply, in certain markets that like a lot of my community members invest in the Sun Belt. We had rising insurance, rising taxes. So it was almost like the perfect storm. Oh, and then all the new supply
It is a
that came
perfect
on.
storm. The hurricanes,
Yeah.
they forced insurance to go berserk.
Yeah, and then all the new supply that came on after the pandemic. Like there were a lot of factors at play that made it challenging. And then sellers didn't want to sell because we were like in a market downturn. So if you look at market cycles, what occurs to me is that like I don't know for sure, but it occurs to me that we're at or near the bottom. Like if you look at a clock, with 12 o'clock being the top of the market and 6 o'clock being the bottom of the market, to me, we're between 5 and 6:30. Like I don't know for sure, but I have my pencils up. Like people have had their pencils down, and to me, it's time to have pencils up. We're making offers on deals. I was in 3 best and finals last week on like big deals, $60, $70, $80 million deals. the price of debt has come down, and investor sentiment is improving. And we're going to see, that's the biggest challenge, because people that got in the business the last 2 years, they're having like memories of what happened recently. But I've been in the business for 22 years. And so, I think as time goes, like every month I'm seeing more and more optimism from investors. And I still see a lot of people actually waiting for the election, because they want to see what happens with that, because there's instability. But I'm gonna put a stake in the sand, say after the election, there's going to be 4 years of stability no matter who wins. Wall Street's going to know what they're dealing with. They're either going to deal with a Trump administration or a Harris administration. In the capital markets and Wall Street, and everyone's going to know the new rules of the game no matter who wins. And I just see the opportunity like now, like probably like it was back in 2012. Like, I don't know anyone in 2012 that said, I wish I would have bought less real estate. But at the time, there was some uncertainty because they were coming out of that downturn. And I believe that's where we're at now. We're coming out of that downturn, and we already see the Fed lowering rates, and we're starting to see more transactions hitting the market. And that gap between what sellers wanted for their properties versus what buyers are willing to pay is starting to, close. And so we're seeing transactions happen. And look, it'll be a great time next year and 2 years, but like it's better now. There's a window of opportunity. Plus, I'm looking to get into a deal by the end of this year because we're still in a bonus depreciation period.
That's
so
50%.
Yeah, so like if we could get into deals in the next, like before the end of 2024, you'll have better tax advantages.
So the words otherwise, lots of awesome nuggets, and I happen to agree. I particularly like the fact that the Fed outlined finally, after keeping the rates higher for longer, they outlined their base case scenario with what's going to happen with interest rates.
Yeah.
And commercial real estate, including multifamily, very much depends on predictability of interest rates. And that's, by the way, that's the biggest problem that hit us in the past, is when they hike unpredictably high. It was too fast, too furious. So now the reverse is almost true. They started to cut, and then they've outlined a base case scenario. They're going to continue to cut certain pace at minimum. Plus, as you said, the election will be over soon, right? And as we all like to personally feel, left or right, does it matter for investing for real estate? In some ways it does, in other ways it doesn't. So exactly what you said. It doesn't matter who wins, let somebody win.
Yeah,
It'll be over.
I couldn't agree more, because like, well, here's what we know. There will be either one administration or the other. And
we probably have preferences.
We do.
For real estate, probably be better that Trump wins, but at the same time, we don't know if it's actually going to make a difference.
Well,
I just wanted to add this point. I have these questions I like to ask.
Yeah.
Who is more powerful, the President of the United States or the Fed chair?
Yeah, it's a
And
great
the Fed
question.
chair is more powerful in relation to real estate. It has more impact.
And then the Congress, like if we have a divided Congress or a divided House, look, I've been doing this since George W. Bush was president, right? Bush, Obama, Trump, Biden, now whoever. It's like you will be successful. We're going to have some environments where there's higher taxes and more, or lower taxes and more pro-business policy, or maybe another administration is going to have higher taxes and maybe more, attention to like minority-owned businesses or green businesses and stuff like that. But at the end of the day, we're going to have a divided Congress. And so that to me is the most important thing, because no matter who wins, it's going to be hard for either side to like pass sweeping legislation that's going to have, major impact.
That's right.
So like, don't wait for the election. That's what I tell people. Like, some people are professional waiters. They're waiting for the, rates to drop. The rates drop. They're waiting for the election. They're always waiting, and you can't move forward if you're waiting.
Agreed. So action is more important than perfection of action.
Yeah.
So what do you think about opportunities? Are you seeing everything you talked about, the bid and ask coming a little closer? Transaction volume is still pretty low. Are we going to see meaningful acceleration of the deal flow. Almost, in order for the market to recover and recover fast, we need some volume to pick up. Right? The volume establishes pricing, it establishes comps.
Yeah.
And this is one of these market conditions where if we only saw a few more things transacting, we'd be so much better off for multiple reasons. Obviously, market pricing, more confidence, more clarity where things are going. In addition, some stock capital could get unstuck, and also new returns could start happening. So what do you think? Are we going to see a pickup? I know it's a crystal ball question. Are we going to see a little bit of a pickup in volume, more deals happening over the next 3 months, 6 months? And are you seeing only brand new buying opportunities, or are you seeing anything with existing deals? Is there a way to come in and help an existing deal that sort of is down, but it's not out in essence? Just curious, what are your thoughts?
Well, you asked a lot there, so let me try to go one at a time. I mean, I'm already seeing transaction volumes picking up because I'm getting a lot of deals in my inbox and in my text messages from brokers. Like, it was pretty quiet for a while. And so, like, I'm seeing more activity, and I think it's really because, like, the cost of debt has come down, and the future predictions, the futures forecast that the Fed made is already getting baked in a lot.
That's right.
So it's not like we have to wait till November and December for these cuts, because they've already announced their intentions, and a lot of it's baked in. So, like, we're seeing rates at a like in the 5% range, which we haven't seen in a long time. Yeah, agency debt. And so that's paving the way for more sellers now to come to the table, where before the last 18 months, it was really only the sellers that needed to sell. And everybody was looking for that, distressed deal where you could get something at 70 cents on the dollar. And some of those are out there, but, like, if that's the only thing trading, that's not enough. And now we're starting to see, like, more normalcy come back, like sellers that are not desperate to sell, or that are not, like, completely distressed to sell. They're starting to put these deals back on the market, and I'm already seeing signs of it. Like, I was in 3 best and finals in the last week, and that was more than I have been in probably in the last, several months.
Well, hopefully you actually win something and you get to close something this year.
Yeah.
So that's great. By the way, you're one of the few people I've spoken, one of the actually many people who are indicating exactly that. Transaction volume is picking up.
Yeah.
Where I interviewed a chief economist of BGO, and he indicated the same thing. They're not yet doing deals, but they're looking at a lot more deals. And these are very powerful leading indicators into likely transaction volume increasing. Okay, let's continue. Sorry, I interrupted you.
Yeah, and I can't remember what else you asked me, but
the next question was existing deals. So I guess existing deals need a point to get to an exit. Maybe that we need both, right? We need some of those exits to take place in the normal conditions rather than distressed conditions.
Yeah, so existing deals, like I'm aware of a lot of people that have existing deals that are doing, like, look, if you have an existing deal and you have a loan coming due, you need to be doing a few things all at the same time. One is evaluating a sale. And you could sell for more today than you could literally just 2 or 3 months ago. So, like, my message is, if you had a broker opinion of value, a BOV, and it was more than 3 months ago, you need to get it updated, because cap rates have already started tightening, and debt is more available and less expensive. So, like, that BOV you got 2 or 3 months ago is already out of date. It's going to be worth more money.
That's a great nugget. The folks need to really feel more optimistic and more proactive. Go look at market today.
Yeah, it's going to be different, because I know, because I'm in some of those myself. And so you want to be looking at reevaluating a sale, reevaluating a refinance. And again, if you looked at this before, you got to look at it again, because things have changed so fast. They've changed so fast.
So on the refi front, which is a great idea, typically, do you need to see a full stabilization, or can you try to refi while you're still working on a value-add work?
Well,
I'm just curious, is it better to refi, lock in the rates today, versus wait a little bit, let the rates come down a little more, and then try to refi? It's a perpetual question. If you've gotten to 90% or 92%.
Well, I think part of it is, like, when is your loan due? and it's not just these 3-year variable rate loans that a lot of people did in 2021 that are coming due now, and I have had a couple of those. So some of them, your hand is being forced that your loan is coming due. So you either got to sell, refinance, or do a loan extension.
That's right.
And you got to be evaluating all three at the same time. Like literally, and I know people that put all their eggs in one basket and then it didn't go that way, and then they got into a situation with the lender where their loan was due and they couldn't, they just went all in on a sale and then they couldn't get a buyer, and then they were stuck. And unfortunately, I know of a group that lost their property. Yeah, so you got to be doing all of them at the same time. And so I was in a deal where we were all in on a refinance, and at the 11th hour, the current lender came back, and we talked to them about doing a loan extension. We were in a 3-year loan with an option to extend 1 year, the 3-1-1. Yep. And we approached the lender multiple times, and they said, hey, we'll get to you. Well, these lenders are so backlogged right now, right? And so we went down the refinance path, but we kept going to our current lender, and at the 11th hour, they said, yeah, we'll do a loan modification. Now, we can get to you, and you still have, 45 days before your loan is due. And we worked out our loan modification. So we did the 1-year extension, which for us on that deal was the best absolute scenario, because now we have a whole nother year and cap rates have already come down. Debt is less expensive. Our property is worth more now than it was 3 months ago. And in a year, it's going to be even better. And I just got a text message from a broker saying, hey, somebody wants to buy this property. And and I'm like, yeah, it's not distressed. They're like, yeah, I know, it's their target property. So like 2 or 3 months ago, I would have said, man, I'm not sure where we're going to end up here. We might end up doing a cash in refinance, which would need a capital call, but here we go. We did a loan extension, and now we got somebody might want to buy it for an exit that would make us a lot of money. Literally in the last 4 months.
This is great advice. So whoever is the operator on the existing deal, they have to always think about optionality. And 3 options: current lender modifications, refi, or sale today, they're all just as viable as ever. In fact, it's critical to do that. So how do you do, what if you have to do a cash call and you can't get a cash call? What other options do you have?
So there's a couple options. So so a capital call, 1. 2, what I've seen operators doing is not just doing a capital call, but they've gone back to their investors and said, hey, instead of a capital call, we'll do a note, and we'll pay you
member loan,
like a 10 or 15, or in some cases even higher. Because look, if you got to get a private equity company to come in, let's say you need $5 million, like a cash in or something, or extra capital, or $2 million or whatever. And you got to get a private equity company to come in. They're going to come in at a high rate, and they're going to want, they're going to have terms that they get more control, or they get part of the GP, or they get, and so that would be another option. But there's a lot of operators I know that have a lot of doors that have offered their current investors, hey, instead of just a straight capital call, we'll set this up as, we need $2 million, and we'll set it up where we'll pay you 10 or 12 or 14% if you put up more money, and then you get paid first before the equity.
Yeah, I'll add one comment on this. This is exactly the right idea. It's the member loan or mezzanine mezz debt.
Yeah.
This is what we like to call it. Some people call get fresh pref equity. It's the same concept. But the idea is you go to your existing investors first.
Yeah.
But some people will not participate. They don't have the cash or other circumstances.
Yeah.
But if you at least set market rates, you could attract external investors too.
Sure.
So you don't have to get all the money from external source with the vulture terms. But if you just do a capital call and you have 30% participation, you're much better off with member loan. You can get 60% participation, 70, and get a little bit more money. But for that, my quick comment is I've seen people do 10, 12%. I think you need to do 18, 20%. And the reason you need to do 18, 20, you got to make it attractive enough for existing and new.
Yeah.
And that money has to be senior on a capital stack to equity. So that money has to feel safe on its own merit.
Yeah.
So I've seen the 10%, the 12%.
I agree.
It doesn't matter if you're doing short duration, a little bit high interest rates, but that's what makes the capital raising easy.
I agree 100%. And, and the other one is like, there could be like, if you have a GP team, like some GPs have done loans, then they went to the investors to do loans. And then if they still don't get the capital, then you get the outside companies. And it may make sense to just have one outside company come in and write that check for a couple $1 million on, that could be another option.
Yeah, I appreciate that. It's a great episode, but we're running out of time. All good things come to an end, unfortunately. So any good book to recommend, any best advice, and how would folks reach out to you, for example, for your mastermind, for your mastery, or they just want to learn about your deals?
Yeah, so, I love reading books, but one I'm reading right now has nothing to do with real estate. It's called Outlive, and it's about how do you, when we're at our age, we got to start thinking about how do we improve the health in our lifespan, not just extend our lifespan, but have more healthy years in our lifespan.
Life.
So I'm actually reading that right now, and it has all the latest, call it technologies and all the, the biohacking and all the things you could do and the exercise and the sleep and all the things that really matter. So it's called Outlive, and it's fascinating. And I would just say if you're over 50, you want to start thinking about those kind of things.
Thank you.
And of course, Rich Dad, Poor Dad, most people read that book, but that book changed the trajectory of my life in the cash flow quadrant, and it still blows me away that some people haven't read those books.
Yeah, it's a real estate 101 and a PhD in real estate for those who are not in real estate.
And then how do people reach me? Just go to Brad Sumrok, BradSumrok. There's no C in my last name. So bradsumrok.com, Brad Sumrok Instagram, Brad Sumrok LinkedIn. No punctuation, no underscore. I've actually found there's a lot of copycat accounts out there. And some of them have more followers than my accounts. And I'm like, what am I doing wrong there?
Imposters, be careful. When you become a well-known personality, you get imposters, unfortunately.
Yeah, but we have all kind of resources, from coming to our events to free content to home study courses to information about our mentoring program and masterminds to how to be an investor. It's all there.
Thank you, Brad. I appreciate your wisdom, appreciate your sharing, appreciate your optimism, and I feel great. And the last thought here, I hope we are safe. I hope this hurricane doesn't cause too much trouble for us. And then we are here in Cancun. It's heading to Florida. So thoughts and prayers for those folks and their families.
Yeah, likewise. I think we've made it through here, but for those in Central Florida, sending you love and prayers. Be safe.
Thank you for listening to the Big Mike Fund Podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to BigMikeFund.com or visit Amazon and type Mike's slot name. Keep listening and keep investing Big Mike style. See you on the next episode.